Can you hear now? That's gonna echo. Okay. Is it still echo? Oh, it's delayed a little bit, but I don't think it's echoing anymore. Trying to figure out the technology. Hopefully next time we won't have these problems. Alrighty, that's why I had him test it.
That's perfect.
Yeah. Okay, so I just introduced myself. If you guys didn't hear, sorry. But you guys know me, Brazilian realtor here. So I'll let Mark talk a little bit about himself.
Yeah, my name is Mark Seidenberg. I am your loan officer for today. Ysmaine and I have worked together since the beginning of this calendar year.
Yeah.
I think one of the big things in the home buying process, I've bought and sold 4 homes myself with my wife and children, not on the investing side, but we do have a second home. So I would say the biggest thing in those processes was the agent and the loan officer relationship. I've been in finance. I'm 40 years old. I've been in finance now for 17 years. And I was not in mortgage finance. And about 6 years ago, my dad, who was in mortgage finance, presented an opportunity for me to get involved in mortgages. The reason I did that was because I had a bad experience myself as a home buyer. We had to put 25% down on a house that we only thought we were putting 15% down, so we had to scramble for money at the last second. We had to rent our home for a month because the closing disclosures were late. Everything is timed. So I saw how much of communication was involved and how much relationship was involved. That's me. That's what I enjoyed. The sales that I was in was not very relationship based with people. So it looked like a good opportunity for me to have a career change and to find something in the finance world that I enjoy doing. Over the last, call it, year and a half, we've done 160 loans in our office. So I have a team of myself and my partner, Joe. You have somebody available 24/7. So that's one of the things that we try to do to separate ourselves. So text message 24/7, 365 nights, weekends, holidays. Agents work all the time. I have to match my hours with my partner.
You do work all the time.
We really do. But houses don't wait for buyers.
No.
They're available when they're available. You might need a pre-approval at 11 o'clock on a Friday night. We are available. If you write an offer at 7:30 on a Sunday morning because it, the
deadline is at 9 a.m.
Yeah, we're available. We're there for you. We understand that.
And trust me, happens. And I can vouch for Mark. His hours available.
I have a 9, 7, and 5-year-old, so
I don't know how he does it, but he
up
manages.
early, up late, but honestly, reliable and available. That's the 3 things that I did not have in 2 of the homes that I bought with my wife. So the kind of 3 things, the 3 pillars that I base my business off of. And between me and my partner Joe and Tim in our office, who's available, we have 57 years of mortgage experience here in the East and West Shore. So we have access to any program, any first-time home buyer program, state grants, county grants. But everything is not the same for everybody. Everything needs to be custom fit, custom tailored when you buy a home. So there's a lot that goes into it, but it's actually a really simple, easy process to buy a house. And we kind of want to show you and debunk some of the untruths of how challenging and difficult it can be. It's maybe a 30-minute process with me and you're kind of done.
Yeah, it doesn't have to be stressful like everybody makes it to be, or like a 7-head beast. It doesn't have to be that way. So we'll get into it. Just a little summary of how the current market is right now for you guys to understand as new upcoming buyers what to expect in regards of the interest rates. So everybody's talking about the interest rates. The interest rates are high. Is it a good time to buy? Should we wait? Should we not wait? To kind of debug a little bit the interest rate situation. Back in 2019, we were seeing about, like on average, because we cannot say, hey, your interest rate is X, because that doesn't exist. There's a lot of factors that contribute in coming up with your interest rate for yourself. So there's no like, oh, what's the interest rate like today? Because it's different for everybody. But the average that we were seeing back in 2019 before COVID was like around 4.5 to 5. And then COVID happened. And then everything, the government intentionally, was feeding into the system to lower the interest rates, and they dropped to the 2s. And that's unheard of because it was an unheard of situation, right? But if you think about COVID did not happen, let's say take COVID out of the picture, and inflation was just normally going up through the years, that 4.5 would probably be a 6.5, which is what we're seeing today. It's just that it caught up too fast within 4 months in 2022. So everybody was like, oh my gosh, we went from 3 to 6 in 4 months. This is crazy. Interest rates are too high. But they're just catching up to what they should be anyway, right? Now, do we expect them to maybe come down a little bit next year? There's a lot of talks about it. Now we're probably talking about third quarter of next year, maybe even 2025. But the difference is not going to be like going back to the 3s or going back to the 4s. It's maybe seeing a 5 again. So it's a lot of speculation. I would not recommend waiting for that to happen if you need a house now, because it might not happen, or it might. We don't know. It's like we don't have a crystal ball, right? The interest rate really follows like a stock market. It varies every day. There are things that may kind of indicate some potential changes, but in the end, we just don't know. We just kind of speculate. In regards of prices, yes, we are in a very inflated market. During COVID, the prices did go up more than they probably should have, right? Because people were taking advantage of those 3%, 2% interest rates. So the market just flew up. Are we foreseeing decline? No. Unfortunately, I wish I could say yes. We're foreseeing that they're going to drop. That's not what we're seeing. We're seeing a lot of price adjustments, which it kind of deceives people when they're seeing the news. Oh, we're seeing declines on the prices. The housing market is not declining, because if you look at when that property was bought and when they're being bought today, even after the adjustments, it's still high. So there's no dropping market value, but we are seeing more adjustments because the market is not rising as quickly as it was in the last 2 years, but we're still seeing a rise. Like this year alone, I think we already saw a 3.5, which is a very healthy, regular market increase in value, not like the 18% we saw in 2020.
Right.
That is just surreal. So that's for the prices. The shortage inventory, that is a reality, and it's tough. We're doing this to kind of prepare you guys for where you're getting yourself into. It's been really rough for the last 2 years, and now especially with the interest rates getting caught up to where they should be and being perceived to be high. Those people that are in the houses with refinanced at 3% may not want to buy at 6.5% now, so they don't want to sell. And that is causing a shortage of inventory. The only people that are selling and buying are the people that need to sell and buy because of a job, because of relocation, because they want to be close to family, you name it. But those are the people that are actually doing this. It's not like before that people are like, oh, you know what, I just want a new scenery for no reason. They might want to push off because the whole situation. So we are seeing a very big shortage, which causes then low inventory, high demand. You guys know that, right?
Mm-hmm.
That's just simple math. So the more people that want it, the less inventory we have. Of course, you're going to have some competition. It is not as crazy as it has been in the last 2 years. It's much, much better. In fact, some areas, I'm starting to see people able to kind of budget on the price, maybe get below or at asking price, not like $20,000, $30,000 over like it has been. Or they're able to get seller's assistance, which we're going to bring that up and explain how that works from the seller, negotiate that, and some things like that. So we're starting to see that things coming back, but it's very market centric. So some markets you are able to do it, some type of properties you're able to do it, some prices ranges you're able to do it, but it's not everywhere. Some areas are still very competitive. To bring up from our areas here, I would say Hershey's is still really, really competitive because of the area. Mechanicsburg, like Cumberland Valley School District, is very competitive because it's good schools. Everybody always wants to be in good schools. So there's always naturally going to have more competitive, providers there. So that's kind of like what you can expect from today's, real estate market. And that's a little bit of a summary. Do you guys have questions for me? You're good there? Mm-hmm. Anybody at home have questions for me? I can double check here. Anybody home? If you have a question, put it on the comment and I'll try to keep an eye on it. Okay, I guess I'll keep moving on. So when you're ready to buy, you need to have a support team. A lot of people do things backwards because they just don't know, and you don't know what you don't know, right? So when you want to buy a home, there's a process that needs to follow. You need to have a pre-approval in hand. You need to have a realtor to work with. And a lot of people think, oh, do I just go straight to the leasing agent? Not a good idea. A lot of people don't understand that leasing agent has a contract with the seller, and their fiduciary duty is to represent that seller only. If you come in as a buyer straight to the leasing agent, the leasing agent by law cannot represent you the same way you present the seller. So the seller is always going to be the first client. So you're not going to have the best representation for yourself. That's why you have to have a realtor representing you as your buyer's agent. In Pennsylvania, the commission for that buyer's agent is paid for by the seller, customarily, unless something is agreed upon differently. So you as the buyer, for the time being, I hope that doesn't change, you don't have to pay for commissions. Everything is paid on the seller side, and that's agreed upon between the seller and the listing agent ahead of time in their listing contract, that they are going to be paying for a co-broker, that we call it, a co-buyer's agent, that will take care of the buyer. So you need to have your representation as with a realtor. And then you also need to have a loan officer. All the buyers, first thing they do, I want to buy a house, and where they go? Zillow. Or Trulia, or Redfin, or
I did the same thing.
Everybody, because that's the easier way, right, to get started. You want to look at homes. And then, you don't think about, wait, should I probably have a pre-approval if I really want to get started first? Nobody thinks about that, nobody. And then when they start looking into it, that's when things happen. So the pre-approval is really important, and we're going to break it down, the reason for that, in the next couple slides. But you do have to have that before you even go anywhere. Understand your finances, understand what you expect, and then be able to shop for the house that meets your financial needs, whatever they are. And then later on in the process, you're going to find out that you have your title company to check everything for you. I love this little drawing because the title company really takes care of the things that you might not think about it, but they're really important, like is there back taxes due on that property? Is there any liens against the property? You don't want to take ownership on a property that is not ready for you to buy. You don't want to take the debt of someone else. So the title company will make sure that everything is paid out if there is any back due taxes, and then make sure you're taking property with a free and clear title. And that's really important just to understand how much. So that's why the title company is part of our support team. You want to kind of give a little.
Yeah, so a couple things we'll talk a little bit about is, from a financing standpoint, is income, right? Like, we need to make sure you have enough money to pay the monthly mortgage. That's the first thing we do. And when we talk about that, talk about your income and having enough money to pay the monthly payment, right? We talk about some other things. What's more important? So for some people, they don't care what the monthly payment is or the down payment. They have X amount saved, and they say, here's how much house we want. For some people, the monthly payment is more important than the total down payment. Some people aren't concerned as much with the monthly payment as they are with how much they have to bring to the closing table. So one of the things we do is we just structure it the way you want it. As long as your credit score is good and you have enough minimally to get to the scores table or to the closing table, we just structure the loan any way you want. So it's what works for me doesn't matter. I basically become a waiter at that point, right? And I'm presenting you a menu of options. Here's the grants from the state that you can qualify for. Here's maybe some county grants you can qualify for. Here are some different loan products that you may be able to qualify for, right? There's no one loan product that's better than the next. It's what does the property call for? What do the buyers call for? And honestly, what's the best? What gets the most money in your pocket when you leave the settlement table? And how do we keep your monthly payment as low as you want it to be? And they're the things that we'll talk through. How do we come up with those numbers? We look at your bank statements. We look at retirement statements. We look and see what you have available, what you want to use, what you're comfortable using, right? And then that's the piece of the puzzle that we have to work with. And then we look at your debt. We look at your debt and just see if there are ways that we can improve your debt through the home buying process. Sometimes you can pay credit cards off, maybe a small auto payment, and sometimes those things can free up some more room to buy a bigger home or to perhaps impact your monthly payment, lower your monthly payment, right? $2,000 a month mortgage payment, we only want it at $1,500, but maybe you can pay off a $500 a month car payment, right? So now instead of having $2,500 a month, you're down to $1,500 a month, and you eliminated a payment while also buying a home, right? And sometimes those creative ways to do things can impact the total cause, right, financially for a family while buying a home. So there's some of the things that we'll talk about.
Yeah. And you understand it too, because for you to figure that out on your own can be really challenging. When you start talking to him, he will let you know exactly, like to the penny, what you need to do in order to get the best credit score or to be able to get to the percentage of debt to income ratio that you need to qualify. But
Yeah, we have a live example that we'll show you guys
show you the details.
of an actual call sheet of a house that's coming to the market, and it would show for somebody, this is to the penny what you would have to bring to this, I call it the scores table, right? Like settlement, scoring your house. So that's what you got to bring to the scores table, and the monthly payment.
So, yeah.
So the next slide here is kind of the home buying process in just a simple way to follow along. This is in your packets too, so you can, if you guys want to like show all your friends this weekend, we can learn. But you'll get pre-qualified, pre-approval. Look, I don't do a pre-qualification because they're not real.
Mm-hmm.
So a pre-qualification is you cannot buy a home with a pre-qualification. It just says, hey, if you want to buy a home, you probably can. Well, that doesn't do anything, right? So we go right to the pre-approval, okay?
Before you follow on, can I
Yeah.
chime in on the pre-qualification? Just so you guys understand, this happens very often with me and clients coming to me, hey, I'm pre-approved.
Mm-hmm.
And then they show me like this letter from X bank. And I'm like, okay, nice. And he says like, oh, you're pre-approved for, I don't know, $350,000. I'm like, okay, so what are your monthly payments gonna be? And they're like, I don't know.
Mm-hmm.
What's your total cost that you have to bring up to the table? I don't know. Okay, so what interest rate did they tell you you're gonna get? I don't know. They just have a letter that says, hey, you're pre-approved for X amount. Don't give them any information. When that happens, most likely what you have is a pre-qualification, especially if that bank in particular did not collect actual documents from you, didn't get employment verification, didn't get your W-2s, pay stubs, whatever, you know. If they didn't collect that, there's no way they can issue a pre-approval. But pre-approval is very thorough, and he's going to really explain that to you guys. But that's the big difference. So if you guys at home or here, if you have a pre-qualification that just doesn't really, you don't have any idea what the numbers look like, chances are you just have a pre-qualification.
So the pre-approval, right? So the pre-approval approves you to buy a home. Once you have the pre-approval for me, it takes 20 minutes, 30 minutes. Once you have the pre-approval, you are allowed to go buy a house. You don't pay for a pre-approval. The only thing that you're on the hook for a pre-approval is I run your credit. Running your credit does not impact your credit score. So like you can Google it. I run credit every day for a living. No one loses homes. No one's credit drops. In fact, I would say 99% of the time my people's credit goes up because I can see into the future credit, right? Like I can run your credit and say, what will the credit be in 3 months, 6 months, 9 months?
Mm-hmm.
So if someone's credit was low, I can do that to evaluate how we get to the pre-approval process. But once you decide to do, hey, I'm going to be a home buyer. I'm going to fill out an online application. So I have a link that you fill out. Everything's online. It's on your phone, so it's an app. Name, phone number, where you live, where you work, and you'll upload a couple documents, right? And then we'll go through those shortly. But the pre-approval process is 30 minutes at most with me. Okay. Once you have your pre-approval, I email that to you. I email that to Nini, and you guys are ready to go shopping. What'll happen is, let's say today's Saturday, right? Yes, let's pretend this is yesterday. You called me and say, Mark, we're finally pre-approved with you. We did the pre-approval on Thursday. Today's Friday. We are off from work on Saturday. We're going to look at 5 houses with Nini tomorrow on Saturday, okay? You would send me those 5 addresses, and then what I would do is I would create for you a cost sheet for each one of those addresses. What if the payment is way too much? You might say, no, I'm not going to go look at that house. Maybe the closing costs are too much. Maybe you don't want to pay that much in taxes. Maybe it requires flood insurance and you don't want to pay flood insurance. I'm going to give all that information to you and to Nini on Friday so that you guys aren't wasting your time. The cost sheets that I give you when you're finding your home, they're going to be to the penny, so that when you walk in the front door and Nini says, look, here's that foyer you dreamed of. Here's the remodeled kitchen. Here's the single home with the backyard on the corner, right? You can make an offer there on the spot in the home because you're pre-approved. She can call and say, hey, we're offering X. And that's a good offer. That's a real legit offer once you sign that. Most people go and find a house and then they call me and say, hey, I got to get pre-qualified or pre-approved. And it's a Saturday. I say, okay, well, I need your pay stubs. I need your tax statements. I need your bank statements. Well, I can't get them until Monday. Offers are due on Sunday. Those people miss that home. So that is really the importance of that 30-minute pre-approval process. Then you're going to find your home with Nini. Once you find the home, you make your offer on the house. We confirm everything before that, so your offers are good to go. You're gonna order a home inspection, or check to make sure the roof's not falling in, make sure there wasn't damage in the basement, okay? You have a purchase and assigned sales agreement that you go over with your agent. You guys are gonna send that agreement to me, all of the fine detail, the final offer price, when the closing settlement date is, when I have to give you your loan commitment letter saying, hey, we guarantee we're gonna do this loan for these buyers. We do all of that during that process. And during that process, we order what's called a home appraisal, okay? So, Dee did a great job earlier talking a little bit about how home prices and values are increasing. One of the things that buyers have, a layer of insurance for not overpaying for a home, is a home appraisal, okay? So let's just use an easy number, $200,000, okay? You buy a house for $200,000 and you put 10% down, right? Easy math. So your loan amount is $180,000 now. When I order the appraisal, it has to appraise for at least $180,000. If it appraises for $160,000, you can only get a loan amount for $160,000. So the appraisal keeps you from getting a loan that you're going to go under on down the road. And that's why having an agent is good, because if that appraisal comes in low, there are ways, right, that she can go back to the sellers and say, hey, that house is not worth it, right? We need to lower the sales price, lower our offer price. You guys may fall in love with the house and say, you know what, grandma's going to give us the $20,000. We can do the loan for $180,000, but I'm sorry, for $160,000. It only appraised for that, but we need $180,000 for the loan. You can get a gift to cover that, but it would have to be cash, okay? So there's still ways, but that home appraisal is really there to protect you from overpaying for a house that's just not worth what it is. And in today's market, it's really important to have those
things.
And to
piggyback just on that spot about not overpaying, a lot of people are like, oh, people are paying so much over, the houses are not worth that. Well,
they are.
They are. They have been appraising high, and that's why the market is going up. So it's not just people inflating the market because, some people were cash buyers. If they're offering high, it's cash. There's no finance, there's no appraisal. So yes, that's an inflation. But the majority of people, I would say like probably 85% of buyers overall are buying with financing of some sort. And then they're going to have that appraisal maybe 70% of the time. So those houses have to appraise at a certain point. So let's say the same example, $200,000. It's listed for $200,000, but maybe you're competing and you end up offering $220,000. Now, if that house doesn't appraise at $220,000, you don't have to pay $220,000 because your offer is contingent. And we might explain contingencies here. It's like a condition for your offer, right? So if that condition is not met, that's a contingency. If that property does not appraise at $220,000, now you're not obligated to pay $220,000. You're going to be obligated, let's say, appraise at $210,000. That's going to be the price you have to buy it. And then that difference, chances are that seller is not going to go back in the market check to get the $10,000 more if they were listed at $200,000, right? So now that seller ends up getting it at a discount, or we can negotiate a little something with the seller.
And to add on the values, so my college roommate, I just did a refinance with him last Thursday.
Okay.
Right, he refinanced. And he went from a 2.75 interest rate to a 7. But refinancing, he just had a baby 2 weeks ago. All right, they're redoing 2 bathrooms in the house. They're redoing a front porch, and they're buying a brand new minivan. Here's why. And that's why I was on my laptop earlier, because I was looking at numbers from his tax records. Phil bought his house in 2008.
Okay.
King of Prussia, PA, right by the mall, right?
Yeah.
$215,000. He looked to refinance with me in 2021. His house was $378 value. He refinanced last Thursday. His appraised value was $468.
Talk about
so he just made
doubling
$253,000 on that house. And he's going to sell it after he does all this, and his agent is his brother. He's going to list it for $499,900.
He's making even more money.
And he just got an $83,000 minivan at no cost. Because when someone buys the house for that much, that's going to pay the minivan. So values are not coming down; they're going up.
Yeah.
So I did want to piggyback on that in terms of he's not even worried about breaking. He's not a very well-off person. but he's not worried about rate because the value in buying a home is going to be able to impact his family in a greater way down the road.
Yes, yeah, the equity thing is huge.
The final loan approval, don't get it confused with pre-approval and final approval. Pre-approval means you can buy the house. The final approval means you're not getting, everything worked in your favor. So the inspection was good, maybe there's a well, right, it's well where the water tested okay, there's no lead-based paint.
All conditions were met.
The termite inspection, like all of those things are the final approval. That's making sure, all right, T's are crossed, I's are dotted, okay? Insurance, there's three types of insurances you're gonna have on your loan, possibly, all right? You're always gonna have homeowner's insurance. You can shop for that. Maybe you have a friend, coworkers, husband, whatever, that does insurance. I can help you get insurance, but that's something that you can shop for. It's $75 a month, call it, right? So you're always gonna have that. There's flood insurance. So if you live in a certain flood area, there could be flood insurance, $7,500 a month. When you do the pre-approval with me and you say, hey, Mark, here's 3 addresses I'm going to look at, you'll already know if you need flood insurance when I give you the cost sheet, okay? And then the last one's mortgage insurance. I don't want to get too much into this because we'll do it when we go through the cost sheet. But if you don't put 20% down on a home, you have to pay what's called monthly mortgage insurance. And basically that is a layer of protection between the investor and you, saying if they default on their payment, here's our insurance. So, and it's not, $50, $80 a month, $100 a month, depending upon how big the house is. But that is a standard thing. Closing disclosure, document prep.
Just to point it out, if you want to learn more about mortgage insurance, I do have my most recent episode of my podcast. We had the president of Enact Mortgage Insurance, and he was a guest speaker, and he explained everything you need to know about mortgage insurance. So if you want to understand more about it, just watch that episode.
And the one big thing is with mortgage insurance, 99% of mortgage loan officers have to use maybe 1 or 2 mortgage insurance because that's who their company uses. I'm not a broker, I'm a loan officer, but I'm not tied to any mortgage insurance company.
That's a beautiful thing because
I have 23. I get 23. And full disclosure, I get paid 1% of your loan amount. So I always tell people this. I make 1% of the loan amount. I could charge you the most points in the world. I could get you the highest rate, lowest rate. It doesn't matter. I get 1% of the loan amount. So my goal is to not steer you to an investor or to a mortgage insurance company. It's to get you the lowest one so that you tell your friends, hey, Mark got us the lowest rate, got us the lowest mortgage insurance, referrals.
And just make a difference because exactly. I've seen mortgage insurance is like almost $200 a month, and then if you're able to shop,
$50, $60, $70.
So that's already $100 less on your mortgage payments.
Closing disclosure, document prep, that's what we do. So we're gonna send you a closing disclosure. That is an official document. So once you go under contract and we're in the final approval stages, no longer will I send you cost sheets. I'm not allowed to, okay? Because at that point, they have to be sent by our disclosure desk because they don't want me making changes after something's happened, right? Because that has happened before with people. So our department will send you a 7-day CD, a 5-day CD, and then 3 days before settlement, final numbers. I give you those numbers, but every time there's a change. So once you pay for your home appraisal, once the mortgage insurance is loaded, once the flood insurance would be loaded, once you know who you're going to use for settlement, title, anytime there's a change, we give you an updated cost sheet so that you know to the day, to the penny, what changes are being made, okay? And then once we get all of the closing disclosures sent to you and we prepare the documents are going to be like title work or tax work on our end, tax prorations. If you close on the 25th of a 30-day month, you have to pay taxes for 4 days because you own that house for only 4 days of the month. So as you lock in settlement date, those numbers change a little bit. But that's what we're doing on the back end. And then we send the document, the package, to the title company, which is here in the office. So we send that. My closing agent, Ann, she lives in New Cumberland. She works with the title company to get us to closing. And then once the title company and my closing agent, Ann, once they say, hey, our closing disclosures match up, we're good for settlement. We go to closing, and then you guys are able to move in. Of all of this stuff here, the only things you guys really need to do is a 30-minute call here after you do the online application.
Going to look at houses.
Going to look at houses.
Go to your home inspection if we have it.
You're gonna pay for this online, $525 to $600. That comes off of your cost sheet. And then
Come to closing.
let us know what insurance you're gonna go with. We can get you multiple quotes if you want, and then show up in closing. So with me, I would say most buyers, it's about 2 hours of conversations, texting and emailing total.
Between beginning and end.
Between it being about an hour to 2 hours
Me and
tops.
you guys are gonna be, I'm gonna touch base on every point.
And we are working together
Together.
through this. So that's why you don't need to worry about what we're doing day to day because it's us working for you.
In the background.
Yep.
Yeah. You don't have to worry about home inspection. I always coordinate that for you, and then I just let you know, hey, what best days for you to be there, because ideally you will attend your home inspection if you're doing one. So I coordinate that for you with a home inspection that I already trust, and work with for a few years. When it comes to appraisal, we cannot know who the appraiser is because that's a third-party service. They want to be unbiased.
Actually, not with Tidewater.
Not with that one?
No, we have our own appraisers.
Oh,
So-
okay, so that's a
So,
plus.
yeah, so we have our own list, again, most people can't, we have our own list of appraisers, so, anybody that does a mortgage, like, any loan that comes in with me goes to one of 4 appraisers in Cumberland County, one of 3 in Dauphin County, and 2 or 3 in York County. If appraisals continuously come back with errors, mistakes, low values, we can remove that. We remove those appraisals off. Now, if somebody comes back and we just disagree with it, you can't just kick somebody off. But if we can find comps, right? Like I had an appraisal come back 2 weeks ago, a deal that buyer was with a local bank, already had an appraisal done on the house. The appraisal came back $47,000 under asking price on Herbs Bridge Road in Camp Hill. Okay.
There are mistakes.
and it was a mistake. They were unhappy. They came over to us. We reordered the appraisal, so the buyer had to pay an extra $600. The appraisal came back $12,000 over asking price, so it was almost a $60,000 turnaround. We know that in Hampton Township, appraisals should not be low.
No.
They should not be low.
No.
So we know through our appraisal desk, we can pull all of the same documents that appraisers use, and then we create our own appraisal for the home. We send it off to our appraisers and say, hey, here's the values we're seeing and that we're finding in Hampton Township. A previous appraisal came back this way. We'd like you to reevaluate. So we have, like with mortgage insurance, we have the ability to reevaluate, to contest, and to go back. Even if that appraisal came back low for us, we still could have challenged it.
Yeah.
So we have some niche options in terms of mortgage insurance and appraisals, which most people don't think about, but they could be deal killers.
Oh my gosh. I
for
cannot
loans.
express enough how important that actually is, because appraisals can make it or break it a deal. If we get a bad appraiser, which honestly some people are just not great with to do, or they made a mistake or they overlooked because they were rushed or whatever. We don't know, but there's people and there's mistakes that are done by people. And that can actually cause a huge problem for that buyer to potentially qualify to purchase that property or not be able to negotiate with the seller. So having this flexibility, I cannot even express how great that is.
Appraisal is probably the most important
I'm glad
piece.
you pointed out.
Yeah, appraisal is probably the most important piece
Yes.
in my eyes as a lender of the whole entire process.
Because it's not just about value, it's about, they also do an inspection.
Well, the inspection can be overcome, right? 'Cause you can fix things.
Yes.
Termite can be fixed. An appraisal, a value cannot
Value cannot be.
The value is the value.
Yeah.
So that is really, Yasmin's so right. It's so important. It's so important.
It is important. So home inspection, I'll help you set that up. The appraisal will be done separately. The insurance, I also will connect you with someone that I trust that can kind of help you shop around for better rates. So this all here, don't feel like you're ever going to be alone. The only thing I cannot help you is the pre-approval. He will help you with that. But other than that, you're going to have someone hold your hand the entire time. So we're here and we work together to answer any questions. We're going to try to get a little more in detail about the pre-approval because as you kind of heard a little bit, the pre-approval will determine even the type of house we are able to look at. And that's why it's so backwards when people just go shopping for homes first and I'll get a pre-approval later. I can get a pre-approval, like I know you can get a pre-approval, but what kind is going to be? What kind of loan is going to be? Is this home qualifying for this type of approval you're getting? So it's backwards. So we have to get the pre-approval first to understand it. And sometimes people don't really understand, like, oh, I want to buy a $400,000 home. But that house in particular may have $15,000 tax. I'm just exaggerating. We have some houses that have that taxes in PA, but not that many. Let's say it has a really high taxes. That monthly payment will be dramatically different than the other property, same value, but has $2,500 in taxes. So understanding that, knowing what your max monthly payment needs to be at, and the type of housing you're going for. If you're a military person using a VA loan, the house has to be in a certain condition. It has to abide by certain safety policies and guidelines. So not all houses will qualify for VA. Same thing with USDA, which is an agricultural loan. That one is territorial. Some areas do not go USDA. So if you're only qualified USDA, you cannot be shopping in Harrisburg, because Harrisburg as a whole is not agricultural. So those things we need to know ahead of time. So knowing that it's important saves you time. Yes, definitely saves you time, because once you do your 30-minute pre-approval with Mark, now I know all that. I'm going to show you the right homes, and we're going to just look at the homes that you're actually able to purchase instead of wasting time online and hours looking at different things. Also put you in a stronger position. The sellers will not even look at an offer that doesn't have a pre-approval, not a pre-qualification attached to it, and they will contact the lender. Like, they will contact Mark and say, hey, how is this buyer's finances? Is he actually in good condition to purchase? This really makes you stronger as a buyer. If you don't have that background, they might not even if you have the best offer, they might not go with your offer. It gives you the competitive advantage in this market. We mentioned it's low inventory, there's competition, there's multiple buyers. If you don't have that ready to go, you're gonna miss out, because if you see a house today and you wanna work on a pre-approval and you only get it tomorrow, that same house might have a deadline for tonight. And that happens more often than not, unfortunately. So you have to be really ready to go. The clarity on budget, we expressed that. I cannot express that enough. Like, you have to understand your numbers, know how much you need to bring to the table, what kind of grants are available to you if that's what you want to try to get, what total cost you're going to have to bring to the table, what your monthly payment's going to be. It's so important. After closing, yes, because you're already going to have all your documentation. So once we get on the contract, his job is simple. He says submit the package to underwriting, and then we'll get the starting of the final approval there. And then identify any issues early. Yes, if he sees that maybe there's a little something on your financial profile, it could be many different things, child support there, or there's, something back leaning, or there's a little thing on your credit, whatever it is that he sees there, he's able to fix that, correct that, so it doesn't become an issue while you're under contract and potentially jeopardize the ability to purchase. So that is really important, and it streamlines the process of purchasing as a whole. All right, so I'm going to take this one out.
Yeah, I'll just go to the next one. Where's the
arrow?
Yeah,
There we go.
All right, so a few things. We talked about like the documents we'll need, right? So like we'll have to learn about how you're going to pay for the house. So we're going to need to learn about your employment. So we're going to look for 2 years of employment. It does not have to be at the same job. It does not have to be in the same industry. You just need 2 years of work, and it doesn't have to be 2 years of consecutive work. You could have worked from 2010 to 2011, a full year, and you could be working the last year going back from today, right? So September 30th, 2022, that's 2 years. As long as you have a W-2 showing it was 2 years from both of those years, you're a qualified buyer. So we're looking for 2 years of employment history, a W-2 to show both, right? And then we're gonna look for your most 2 recent pay stubs from your current job. That's what we're going to look at for the pre-approval process, along with any bank statements that you might have, just to show us where the down payment's coming from, okay? On here, what will happen is once I get all of that data, I'm gonna look and say, okay, based off of your credit score, they can go either conventional or FHA. So they're the 2 main loans. The last 3, I would say 90% of people will never experience a day in their life. But those first 2 are going to be what we have to decide between. Conventional and FHA. They're both great loans. There's not a loan but grandpa can't say get an FHA, or grandma can't say get a conventional. It doesn't work that way. You have to look and see what your credit is, what your debt to income monthly is, and that's going to tell me what loan you can qualify for. Some people can qualify for both. If you qualify for both, FHA is going to have a slightly better rate. FHA is going to have a slightly less amount of mortgage insurance sometimes, right? But a conventional loan in a certain situation may be more attractive to the seller because you can waive certain things. So that's how a team comes in, because I'm gonna tell you, hey, financially, it's black and white, this is what you qualify for, this is what you can use. The realtor then's gonna say, hey, we can position ourselves best with one or the other. So conventional or FHA, difference basically is gonna come down to rate, to mortgage insurance, and to the home. What type of mortgage product is gonna be best for the sellers. USDA loan is a government loan, okay? A USDA loan requires 0 down payment. The challenge with the USDA loan is before you go and do anything, I have to see the address. So Middletown, PA, for example, there's USDA houses available in Middletown, PA, but there's also houses in Middletown that are not USDA. So it doesn't go by county, it goes by the address of the home. So you could have 5 houses on a block, the corner lot could be USDA, the other 4 are not. So we look address by address. I go online, I go to a USDA website. You can do it yourself, by the way. You can go on USDA and just put it in.
And just search eligibility map.
Yeah, eligibility map, just put the address in, it'll say yes or no. So that's a USDA loan. VA loans, obviously, for our veterans, and then a jumbo loan. Real quick, sometimes this might come up when you Google. I try not to talk about it because 95% of people it doesn't happen, but it does come up. I just want you to be educated on what it is in case you're not. Jumbo loan is any loan amount over $724,000. So if your loan amount is $725,000, you have to go to a jumbo loan. Basically, it means there's more risk. So it's going to be higher interest rate. It's going to require a 20% down payment potentially, etc. But they're the 5 type of residential mortgages that you can get. The first 2 are the ones that we're really gonna work on. And those first 2, all grants can go with them. So a state grant, a county grant. Remember, that's just the loan. The grants and stuff are the things that go on top of that. Okay. Is the next one the slide sheet or the cost sheet?
I think we're coming to it, but to break it down here in the conventional, there's a big myth there. Oh, conventional, I need 20% down. No, you don't. There are 3%, 5%, 10%, 15%, 20, I mean, you name it.
Yeah, and once we go through your, like, the credit profile, that tells me what you're allowed to do, from a down payment standpoint. We always are gonna present minimum down payment to you, but if you tell me your goals are, hey, I wanna be here on monthly payment, well, that might require lower loan amount, right? Less monthly payment, or higher loan amount, higher monthly payment amount. So, some different ways that.
Yet, but we can come back to it.
No, you're good on this. So what we'll do is once we find the loan amount, or once we find the loan product and we qualify you, that's when you guys are gonna go out and you're gonna tell Nini, because a lot of people tell me, hey, I want 4 bedrooms. Great. I want 10. But that's the realtor. That is the realtor. School districts. Now here's what I'll tell you when we talk. The only thing I'll talk about with you guys in terms of any of this stuff is location, right? Because are you in the state? I'm licensed in Pennsylvania, Maryland, Jersey, so I'm talk to you about location. I'm also going to talk to you about location in terms of school district for the only purpose of taxes. I don't care about your school district of choice, because that's your conversation with the realtor. But I want to tell you that, hey, a $400,000 house in Susquehanna Township is not a $400,000 house in Hampton Township, because the taxes are going to be $400 a month or $600 a month versus $200 a month, and that's going to really impact your monthly payment. But it can also not qualify. So if somebody is looking at a house in Middletown, and then they look at a house in Susquehanna Township, Campbell Borough, right? Your ability to, that pre-qualification letter we talked about earlier says, hey, they can buy $400,000. Yeah, but maybe if the taxes are $200 a month, you qualify for that. But if the taxes are $600 a month, you may not qualify. So I'm just going to talk to you about, hey, here are the taxes in that district versus this district if we are evaluating cost sheets. Then the only other thing I'm going to talk to you about is, hey, this is a townhome. Did you see there's an HOA fee? Nini probably already have told you there's a home. Is there a capital contribution fee? You have to contribute early. Not all have that, but some of them do. So when I give you your cost sheet, I'll have all of those itemized out for you. Detached single family home, right? Townhome, does it have an HOA or does it not? And then condos are very tricky.
Yeah, not all financing types.
I probably can't do 90% of condos in this area. I can, but they become very, very expensive because right now they're really expensive to insure. Doesn't mean we can't do them. And it doesn't mean that if they're not insurable today, we can't fill out a form and request them to be insured. but they're pretty much the three things that I'm gonna have to work with you on in this. But I always try to stress to the buyers, anything, the wish list of a home, that's, you know, she is gonna make your dreams come true, and I'm gonna try to lessen the impact of the financial burden on the family as much as I can.
Yeah, and I do feedback a lot on the pre-approval that Mark's gonna provide you, because my first question to my buyers, you may think like, oh, you're gonna ask what kind of home they want, right?
Mhm.
No. What's your max monthly payment? Because you may be qualified, maybe your max ideal purchase price with Mark came back as $500. You don't wanna pay $4,000 a month. You know what I mean? So I'm like, I'm gonna ask you myself, I know you're pre-approved for whatever amount, but what is your ideal max? Like, what you don't wanna pay more than? And then when I'm looking for houses, then yes, I wanna know what kind of homes you want and what not. When I find those homes, I'm gonna look and see, okay, this is probably gonna be the estimated monthly payment, and it's above what they told me their max is, so I'm not even gonna bother showing you that house unless you decide to change your mind and wanna stretch your budget, right? But that kind of is my guideline when I'm showing you homes, so I'm not wasting your time. You know what I mean? So that's why it's so important, because yes, you may qualify for 400, 500, but that varies per house because the taxes are different. There's an HOA fee.
And and it's so important. That's why I always use the example of, like, you need to, if you're going to look at houses with Nene, she can give you an estimate. You need to get the cost sheet from me.
Yeah.
Because I am
Every house is different.
I am giving you your interest rate. Like, I'm the only person that can do that. I'm giving you your interest rate for that day, so that if you, like, let's say the interest rate's 6.75, I'm just making it up, on Friday, and you fall in love with that house, well, if rates go up to 7 on Monday, you may not qualify for that house anymore. So we don't want to put an offer in, right, using rates, especially if we're at that threshold. So it's so important, and I love the way Nene really values the pre-approval process, because it's setting you up to win a house.
Yes.
Especially in this really competitive.
It's a very emotional thing. Imagine you go to, I show you, I don't care about this. Let's say, you know, I do what most of the agents do out there. I'll show you this house, it's fine. We'll go see it. Then you fall in love with the house. Everything about the house, you just fall in love. Then we go to run the numbers. Later, then I'm like, oh.
And I tell you, you can't afford it.
You cannot buy it. Or you cannot compete because maybe there's more. Now what? Now my job is going to be even tougher, because how am I going to find another house for you to fall in love? It's tougher. It's an emotional draining situation. I want to avoid that from the beginning. So every house I show you, you know you can buy, and if you fall in love with it, I know you can get it, and we can fight for that. You know what I mean? So that's how I work. Not all agents do that, but that's how I like to do it, because I'm setting my clients up for success. That's really what I'm thinking. I'm just setting them up to find a home and be able to buy.
Like, I just don't understand how anybody could go to potentially, you're not buying a $10,000 watch, right? Like, you can't return it. I don't know how anybody would spend $250,000, $200,000, $100,000, right? And not know everything to the exact cent or penny before they leave their home to go look at a house. Because it's just such an important thing to do the homework ahead of time.
It really is.
It really is.
So yeah, so all these things I'm gonna ask you, right? And again, so important having a pre-approval. If you have an FHA loan approval, I'm not even gonna show you condos, because majority of condos are not approved for FHA. Now there are some that are registered under the FHA, but they have to submit an application, be approved by it. And if you really like a condo property, I can make sure that it is, he can help me look it up and make sure it's certified. But like you said, it's very tough. So I would take that away. If you had conventional loan, then we can look at everything and we go case by case and we kind of investigate further then. But knowing this ahead of time, knowing the approval, I can show you the right houses ahead of time as well. And then bathrooms, you know, all this stuff here. And I'm gonna go to the next slide, and I think that's, the search tools. So once I know what you're looking for, and we're gonna do a sit down, we're gonna talk about it, so I can really learn what you're expecting to get. What are your must-haves? What are your nice-to-haves? What are your really, really nice to have, but not mandatory? You know, once I know all that, I'm gonna set you up in the MLS. The MLS is the multi-listing service. That's where every single agent in Pennsylvania will put the houses for sale. Think about it as the hub. And then from that site, it gets distributed to all the public sites that you know, Zillow, Redfin. So this is the source, okay? everything is in there, including properties that might be coming soon, not yet active. So that gives the clients that I'm working with a little bit of an edge, because as soon as the property that they're looking for, the criteria that are set up for them in that MLS search hits the market, you get notified right away, and you can text me, Nini, I want to see this house.
So there's a house, I live in Campbell Borough, there's a house 2 blocks down from me on Columbia Avenue. There are people out front of it this morning, yesterday, looking at it, like just driving by and looking at it. It's been under contract for a week and a half.
Oh.
The guy that lives there, it's a rental property. Nick lives there. Nick was a patient of my wife's. So Nick has to find another place to live. That's why we know it's already sold. So he came to us and said,
People are still driving by.
yeah, there's people still driving by it. So I went on Zillow and it's listed as active. But if you look on the, I have access to the MLS. That's where I get your tax numbers from, so they're accurate. It's listed as pending on the MLS. So if you look on, if you just use Nini's site and stop on Zillow, you're gonna get everything up. There's also houses that are coming soon that are not on Zillow, but they're on Nini's site. So if you're approved with an offer, you can say like, hey, this house is coming to market next Thursday. She can put an offer on for you now before it even goes to market. And people win houses that way. So I can't stress enough to stay off of Zillow and stuff in this market and to actually get with an agent and to get on the MLS.
Yeah, Zillow should be a supporting
That's a plug for
search
Nini,
too.
but it's also so smart.
It's true though, yeah.
No one's doing that. They all want to do Zillow because they don't want to be with an agent. They want to feel locked in. They're missing on everything.
They are. Plus, a lot of information that feeds into the public sites ends up kind of losing some, and it comes into the public sites incorrect. So, for example, of that, a lot of people are like, oh, this house sold for like 100, and now it's listed for 300. How would that make any sense? I was like, where did you see that? On Zillow. And I'm like, okay, so I go to the public records in the MLS to actually look and to see what happened. What happened is that person just refinanced their house. And it was refinanced for 100,000. Now it feeds into Zillow as it was a sale. It wasn't a sale. That person still is the same person that was. They just refinanced, so it is perceived into the public site incorrectly. So some things are correct. Don't get me wrong, but a lot of things are not. So yeah, especially taxes. Taxes sometimes feeds it incorrectly, so they might be showing some astronomical or something very low. So if you have doubt, just always either go on the MLS, which I will do the portal for my clients, or you can just ask me and I can just double check because I have access to the public records. So once I give you the portal access, what I'll create is an automated home search. So I'll create something really specific to what you told me, like 3 bedrooms, central air, a basement with at least a little bit finished. I want in this school district or this school district. You know, I will really fine tune that search, and you're going to be getting automated emails on a daily basis or whatever frequency you want. And in this portal, you have the ability to mark the ones you like with a heart as a favorite. Everything you mark, I can see it on my end as well. And that helps me so much to understand how much, because everybody has a different taste. You have preferences. And then once I start seeing what you're marking, it helps me learn your taste. So I know, like, oh, I'm not even going to show this house for them. Even though it fits all the check boxes, but I know you're not going to like it because it's not your style. And now I already know your style because I've been seeing what you're marking. So that helps me a lot on that. And everybody's different in that sense. Attending open houses, please feel free to do so. If you want to do open houses on your own, go for it. There's always going to be an agent there. They're always going to be trying to poach you as a client. You already have an agent, remember that. But they're going to be there to do an open house. So open house is a good way for you to just see the house on your own if you just want to walk around. And then model homes. If you decide you want to do new construction, that is an option. You don't do new construction, right, Mark?
No, we do new construction.
You do? Okay. So Mark can do new construction loans. Not all lenders do, that's why I asked. But
anything residential.
Anything residential. So yeah, so new construction is a little bit different. You can also get properties that are like soon ready. Maybe they are finishing up and they might be ready in 3 months. That's still a regular residential loan. So Mark can do it. It's just as a normal property, but you can get it before. The beauty of new construction, sometimes you avoid competition, because once you get there and you say, I want this one, they're not going to go and shop and wait for other buyers. You know, that's you. That's done. So kind of takes it away a little bit of the competition. Another thing too, if you want to build from the base, like from the ground, you can. So you can do your own design, personalized option. So that in that case, now there are some options where you don't have to make interest payments throughout the build. we can get more in detail into that one if you guys are interested into this, but this is an option, so don't think you don't need a buyer to go for a new construction, a buyer's agent. You do. You can have a buyer's agent go with you and assist you to talk to the builder and get into the terms. So, but that's also an option. And then private sales. Let's say for some reason you'd have a cousin, a friend, an uncle, friend of a friend that is selling a house, but they don't have an agent, they're not in the market. You can still have your agent kind of coordinate and just act as like a transactional licensee, and it's going to cost much less for both parties, but you still have someone kind of taking care of the documentation. So if you find something in that sense, this is still something that you can work with an agent to kind of have things done correctly. All right, so those are all the search tools. Now making an offer. Kind of close that, but it's a closing date. Okay. So making an offer in this market has been, we have to get creative, right? Because I mentioned about the competition and things you have to put in place. And I'm just gonna very overall, very high level explain some of the things here. But when you are not the only buyer for one property and you know you're gonna be competing, there are some things we might have to consider depending on your financial, capabilities. We can offer a higher amount. That's a given. Remember, you're also going to have that appraisal contingency in place that's not going to let you pay over, but you are allowed to offer over. You can offer how much you want, you know what I mean, as soon as you qualify for that amount. But it's always going to be contingent on the appraisal. We can use something called an offer escalation, which is an escalation addendum to the agreement of sale. And that form allows me to not just like, hey, the property is set for 200, you want to offer up to 220, but you don't want to just say 220 right out of the bat. So we do an escalation addendum that says we increase the offer by increments of X amount, let's say $1,000, up to 220 if there is a competing offer. So if there's a competing buyer, that the max buyer offer competing was 210, then you beat that offer by 211, and then you get it potentially, right? So that's how the escalation works, and they have to prove they have a competing offer when we're using this addendum. You can also offer higher earnest money. This is something we maybe didn't mention yet. When you put an offer on a property, you have something called earnest money that's going to be due within 5 days usually from the offer acceptance. The earnest money is nothing above and beyond what your cost is. It's just something that you're giving in advance. So let's say your total cost, like down payment, closing costs altogether is 20, and you gave earnest money of 5. So now the closing day, you're going to pay 15. So that earnest money is just an amount that you're giving in advance. It's like your skin in the game. Like, hey, seller, I want to buy this house. That's my skin in the game. Mm-hmm. How do you lose that money? If you back out of the property, like the deal, with no reason whatsoever. Okay, but I had changed your heart. I saw the other house that came in the market. I'm going to go for that one. You're going to lose a deposit. Okay. Mm-hmm. But the earnest money cannot be lost if, for example, you have an inspection and something came up with an inspection, you're not happy with it, the seller doesn't want to fix it, you cannot get into an agreement, you're backing out, so you get your deposit back. Okay, you cannot lose your deposit if you have a contingency in place, a condition in place. Same thing with an appraisal. If the appraisal doesn't come back where you want it to be, and the seller doesn't want to negotiate, that's a condition that wasn't met, and then you can back out and you still get your deposit back. So every time there's a contingency in place and a condition in place that secures that situation, and you back out because of that, that deposit is always safe. If you back out for any other reason, then it's not, then you lose it. So that's something to remember. One way to make your offer appealing is offering a higher earnest money. Or maybe you want to make it even better. You can say, look, seller, I'm giving a $10,000 earnest money. 5 of it is non-refundable. Because now you're saying you're guaranteed to keep 5, even if I back out for any reason, right? That's a way to make your offer appealing. But that doesn't have to happen. It's just an option. Transfer tax, something that happens with every sale. The seller pays 1% and the buyer pays 1%. That's always in place. A buyer could offer to say, hey, seller, I will pay your transfer tax for you as a way to make that offer more appealing. So that's what the transfer tax is. Appraisal gap. We talked about the appraisal. Let's say you offer to 220, appraisal came back at 210, but then you say, hey, seller, If it doesn't appraise it to 20, I'll give you $5,000 towards an appraisal gap because the appraisal came back lower than what is supposed to be on the agreement of sale. So you can offer that amount. But those things are, just keep in mind, these are all out of pocket, right? This all increases your closing costs. But there are options that you can make it. The inspection contingency. I always recommend inspection to be in place, please. Don't get me wrong, but there's a lot of buyers that are waiving this contingency and not making their offer contingent on that. That doesn't mean you don't have to do an inspection. You can still do an inspection, reserve your right to inspect, but you can waive the contingency, meaning you can waive your ability to negotiate repairs with the seller. Okay? So that's something that you can do. One thing that is in your packets, and everybody that register online, I am offering everybody a home warranty. Home warranty protects you for the first year in your house, in your new home. That will be a gift from me. It's a $500 value. So if it covers most of the major items like your roof leaking, your HVAC stops working. Those are like the thousands, kind of repairs needed. That home warranty will cover a lot of those. So it gives you a little bit of peace of mind. So all these people that are waiving inspection, you should definitely consider having a home warranty in place because at least it kind of counterbalances that. The house inclusions, maybe they were leaving a bunch of stuff. Maybe you can say, I don't need all this stuff, or you want stuff. You can negotiate stuff to stay in the property. It goes both ways. And then the closing day, me as your agent, I'll make questions to the listing agent saying, hey, does the seller have a date that he wants to close? Maybe he's waiting for a new home to be ready, or he needs a rent back option because he might have to stay in the property a little longer than he needs to be. So that could be a way to make your offer more appealing by, providing that seller with that date, if it works for you, of course. So that's kind of like the stuff about the offers. And whenever it's time to make an offer, I will, of course, go over all of these options with you guys. Alrighty. So when your offer is accepted, we've talked about the earnest money that is going to be due in 5 days. I explained what that is. Do you have questions on that part? No? Okay. And inspection and then negotiation. So an inspection contingency, there's a lot of misconception on this. From the buyer perspective, inspection is not a pass or fail. The inspection, the buyer inspection, is a way to negotiate repairs with the seller. And it's a negotiation contingency. So if the inspection comes back, I don't know, there's a leak on the roof and the outlet's broken, and the water heater is not working right, those are things you're going to have the ability to negotiate. If for some reason you don't agree, that's when you back out, get the money deposit back, and move on, right? But this is not a pass or fail. A lot of people think, oh, it's a pass or fail. It's not. What comes to be a pass or fail potentially is the appraisal inspection and the appraisal itself. So the value, and the appraiser also inspects the property for like standard feature guidelines, safety guidelines that they have to follow based on the loan type you have. So if they find something that needs to be repaired during that process, that could potentially be a pass or fail because if the seller doesn't agree to do it, you are unable to do it, the bank is not going to approve the loan. So yeah, this is a fail, right? Majority of times, the seller will abide by any inspection repairs that are required because they know that's something that needs to happen and it's part of your contingency on financing. So that's the appraisal portion. We get the insurance, which we talked about. That's just a quote. You can shop around for your own insurance. And if there's flood or anything else that you want to get, Mark's going to finalize your mortgage details, and then we do what's called a final walkthrough. The final walkthrough is something that we do like a day or two max before the settlement day, and it's to make sure the house is first in the same condition that you originally saw, that nothing else is broken, new, and if there were repairs done for appraisal or for inspection, that they were done. So this is like a visual final inspection. They make sure that the seller left the house broom and clean, free and clear of any debris. So that's what that is for. And then we get to the settlement day. That's the day you're gonna, congratulations, you get the keys. You sign all your documentation. You're gonna be bringing any of the remaining funds that are due, from the down payment and closing costs, and then signing all the lender documentation required for that day. And now I'm gonna let you take over.
Yeah,
Okay, that's the cost sheet here.
Yeah, you just go to the next one.
Okay.
So I want to go over this real
You
quick.
guys have that in your packet. It's bigger, so if you want to look at that.
we've talked about most of this stuff, so I mean, I don't want to be redundant. I just want to pick out the things that are the most important. So when you get a cost sheet from me, here's what you got to pay attention to. There's 4 areas you got to look at, all right? First area is, just make sure your loan information is accurate, right? So you're always going to get your interest rate. I use 7%, just as a placeholder. So you're always going to have your interest rate, and then LTV, you're going to see that a lot, loan to value. All guys, some people get confused. Whatever your down payment is, whatever percentage, just minus that from 100, right? So 96.5, that means you're putting 3.5% down, right? So it means your loan to value, your loan amount is 96.5%, right? And then you own 3.5% of the value. That's all that is, right? Product, it just says FHA loan. So, all right, couple things we want to look at. The very first thing I want to tell you is what's called your escrow setup. All right, have you guys heard of escrow setup? All right, so when you do a mortgage, you're going to have what's called your monthly payment, right? You might see it listed as principal, interest, taxes, and insurance, PITI, okay? So it's going to have those things. Your monthly payment of $2381.83 on this sample home of $300,000, here's what it's made up with, all right? So your loan amount's $1959.75. So that's just paying your loan and your interest, okay? Then you're going to have hazard insurance or homeowners insurance, same thing, all right? $90 a month. It's an estimate. We already talked about you're going to shop for those. Real estate taxes. This house, the taxes are $200 a month, okay? And then your mortgage insurance, $132.08 a month. Okay, what does that have to do with escrow setup? Each month when you make this payment, your lender, right, we pay your mortgage, your homeowner's insurance, and we pay your taxes. So you're not writing a monthly payment for taxes. It's just one payment, and then we go ahead and do that, okay? When we set up your escrow account, I do that through the pre-approval, or excuse me, through the cost sheet process, you'll get this little prepaid reserves. Here's what this means, okay? Let's say we're closing on the 15th of the month, or the 14th of the month, it's a 30-day month. That means you're gonna own that house for 15 days. Remember we used that example earlier of 4 days, okay? And that's just showing, hey, for this month, daily interest on the home, you're paying $56.49 per day, okay? If you bought the house on the last day of the month, that would be 0, because your first day waking up would be the first of the month, okay? You're gonna pay 1 year, so your total closing cost, you pay 1 year of homeowner insurance ahead of time, okay? You pay 1 year of property taxes, 12 times 2, you pay 1 year ahead of time. Why? So that we can make your monthly payments, okay? So when you sell a home, when you refinance, you get that back. That'll be a credit back to you, okay? Because remember, you're paying each month, you're still paying your taxes, okay? So this is your escrow setup. This sits in an account, and then that's how we make your payments for you. So you have one mortgage payment, auto payment, right? Just have it deduct it. All right, so the first thing I always say is, hey, make sure you know 96.5, going to be an educated buyer. I know what my loan to value is. I know what my rate is, all right? I know I know my escrow setup, and then I know my payment summary. I know that to the penny, if you guys would have bought this house on Friday, you'd be paying $2381.83 a month. To the penny, okay? Here are some estimated closing costs. So underwriting fees, document fees, prep fees, title fees, settlement or closing fees. We talked about title insurance. So you're always going to pay title insurance. That's a set amount by the state. So I just go into a website. I look, this is the purchase price, $300,000. The title insurance on a $300,000 house is $2,165. That doesn't change, okay? State tax, this is the other big one. So you always pay 1% state tax, so it's 1% of the purchase price.
Tax I was talking about.
So it just, that's $3,000. So that's some closing costs. Now, the appraisal for this house would have been $625. After you pay that appraisal, that $625 would be deducted from this amount. So you're going to look at the top of the closing cost worksheet. You're going to make sure you understand your payment. We're going to go through these numbers for every home together. This we're not going to go through because you're going to understand this as we go through everything else. This just is what it is. But these are the numbers that aren't going to change other than your state, your state tax and your title insurance, because as the purchase price changes, those numbers have to change. So monthly payment, escrow setup allows us to pay your taxes and homeowners insurance on your behalf, so you never miss a payment, right? And then these are your closing costs. I'm so glad I hit the right button.
I know, there you go.
I'm just going for it. And then, okay, this is like the
number, right? Like the, oh my gosh. All right, so purchase price 300,000. We talked about the 10,000 in closing cost above. Total estimated reserve prepaid, that's that escrow setup. So that's a year of taxes, that's a year of homeowners insurance. That's the 15 days of daily interest, which was 800 some dollars. All right. So this is your total loan amount cost, or this is the total purchase cost when you put everything on top of the cost of the house. Okay. Don't worry about this. Base loan amount. All right. This is your mortgage insurance. You're financing the upfront premium for that, so that goes into the loan, and that's going to give you your total loan amount. Great. Now we got to figure out how much money you're bringing to closing. So on this house, minimum down payment on a $300,000 house, you're looking at $25,000. Okay, so that's minimum. How do we come up with that number? Well, there's three ways you come up with that number. You write a check, and you have it in your bank account, right? There's gifts, right? So maybe there's a grandparent, aunt, uncle, parent, relative that says, hey, you're buying your first home. I'd like to gift you $5,000 towards your closing, $10,000. Okay, it's pretty easy. All we do is we get a gift letter. We say, hey, here's the gift letter, and then we have those people wire the money at settlement so that we don't have to collect bank statements. It just makes the process so much easier, especially if it's a grandparent. They don't want to share a ton of bank statements. You know, there's some different things and different ways we can do that just to make it less inundative on their privacy. Some people don't care. All right, so we can figure out if there's a gift coming from anybody, how we can use that. There's really no restrictions on the gift. It's like a dollar amount wise. Okay, so that's the first way. Mark, there's no one that can gift me money, and I am a little bit short. Okay, the next thing we do then is we go into county grants and state grants. County grants and state grants are available for everybody, but you have to fit in a little box. So you can't make a certain amount of money. If it's Cumberland County, you have to have lived or worked in the county for either 1 or 2 years consecutively. Dauphin County, there's some different things. So what we do is we just say, okay, here it is. Here's the state grants you can qualify for, or you can't. Here's the county grants you can qualify for, or you can't. Here is how we can work the gifts, or you can pay it. So there are the three ways that you can impact this. Now,
I can help.
there's also a way that I look at these and I run numbers, and then I present some ideas to Nene. So I go to Nene and I say, hey, we don't have the money to close. We're $10,000 short. And she's like, oh man, what are we gonna do? I say, okay, here's what we're gonna do. I'm getting confident. we are going to increase our offer to $310,000. They already accepted your offer, right? They already accepted your $300,000 offer. So the sellers are whole. They're good. They're like, yes. But we are 10 grand short. So here's what we're going to do. Nene and I have worked together with a lot of agents. I would say we have a lot of trust with agents in the area. Yeah. We're going to say, hey, Bill, to the agent.
This is like on the side.
Yeah, so I'm going to email the agent, and I'm going to copy Nene and say, Bill, we need $10,000 for settlement. We're going to offer you $310,000 because you agreed to $300,000 already. But now we're going to give you $310,000, and we want that $10,000 back at settlement, and our buyers are going to just add that $10,000 into their loan to cover the $10,000 that we're short. And now your mortgage payment goes up $12 a month. But you have the $5,000, but now you have a home. Okay. Wow, that's a big number. No, it's not. Historically, it's not. It's not. We've lived in a 3-year world of play money when it comes to rates. And I know that's not what people want to hear, but it's the truth. Rates are going to come down. Housing prices are going to come up. Realtors are not stupid. Listing agents are smart. Their job, fiduciary responsibility, is to get every maximum dollar amount for their sellers. A smart agent knows that when rates go down, your buying power goes up because you have more monthly debt to income. They're going to raise the price of the house to make up that.
Exactly.
That is good business. If the seller's agent's not doing that, they're not getting the top value for their customers. Okay, so housing prices are going up. I gave you a real life example from last Thursday. Interest rates are going to, Friday was the highest we've had of any rate since 2008. Friday was the worst day since 2008. We're probably on the back end of it now.
When this rate comes down to 6.5, this house is 325. I'm making this up. When this rate comes down to 6, that house is 332. When this rate comes down to 5, that house is 370.
Yeah.
When you buy this house right now for $300,000 at a 7% interest rate, you're marrying the house. You can't change that. You're dating the rate. Marry the house, date the rate. We're going to refinance you in 2 years, year and a half, and you're going to go from 2381 to 1781, making it up, right? And now now there's a family started, and now you just relieve $500 a month in mortgage payment. That's daycare, that's auto loans, that's all those things. If this house price goes to 370, you're not refinancing that. And if you wait to buy and those houses go up to 370, now when you go to flip it and sell it in 3 to 4 years, you're selling for 410. You made 30 grand versus eating the $20, $40, $200 a month, whatever it would be, and just saying, hey, yeah, I'll take the 7% interest rate. Historically, it's a great rate. My dad's 63 years old. He had an 18, 14, and 12% interest rate pre-2008.
They were high before.
So these are fair rates, but they're going to come down, and housing prices are going to go through the roof. There are buyers that are just waiting right now to buy a home, but they're never going to buy until rates come down. Once those buyers come out of the woodwork, like my wife and I, we're not looking to move, but if we would never buy right now at 2.75 interest rate. But when rates come down and me and my wife are willing to buy and get a bigger house, we're probably not going to lose a deal because we have all these years of waiting to buy to save up money to make our offer more competitive. But I also have a house to sell that's growing value, so I can offer more because I have more to sell. Right now, all those people are sitting out, so that competition is not there.
So it's a good time to buy. People don't understand that.
It's crazy.
Yeah.
Yes, I need you to buy a house so that I can make a living, right? But it's also a great time to buy a home because you are getting it when other people are worried about this. I'm sorry, when other people are worried about this number, you're worried. I'm sorry, when other people are worried about this, you should be worried about this.
Yeah.
And they're saying, well, I'm not buying it. Well, guess what? I could show you probably 30 clients. We have just us. I wrote down, I was looking online. 31 buyers you and I have year to date since 2022 from Sheila. So back in November, 31 buyers that now around the numbers, they don't qualify for the home they were looking at from the time her and I first met. They don't qualify anymore.
They don't qualify anymore.
And now the prices of that house was like, well, it was 227 was the one I looked at, and it was on the market for like 110 days. It sold for 305. Like they lost $70,000 in equity. That's because they were worried about rates, but those rates were 3.75, 4.5, 5.5, and now it's 7, and the house is 50, 60, 70,000 more, and the interest rate makes the payment. Their payments were $1,600, $1,700, $1,800, but they waited for rates to come down, and now that payment's $2,400 at 7%. They're never going to buy a house because they're mentally they're never going to get back to where they were when they were in a good place in March, in February.
That's what's called the cost of waiting.
Yeah,
That's plain and simple, the cost of waiting.
Yeah, I mean, my college roommate just went from a 2.75 to a 7 and a quarter or whatever it was. That's my college roommate. I'm like, yeah, this is a perfect time to do it. You have $200,000 in equity in your home. Well, if the people that are waiting because they're looking at this number, they're losing the equity. This is the next year is the last great growth time for equity in homes. It's going to start to slow down. It's not going to stop, but 15, 20% is going to be 2%. Exactly. It's going to be cost of living, right? Like right now, this is the last 8 to 14 months where someone can buy a home and probably make $50,000 to $70,000 in the next year to two when they sell. So you buy a $200,000 house today, you make 20, 30 grand on it. That's your down payment for the $350,000 house.
They can get a better home in 2 years.
My wife and I buy and sell a house every 3 to 4 years because we take the value and we buy the next house.
Pay some debt.
And we keep buying bigger houses and we're lowering our payment because we have never worried about this. We've always worried about the value and equity in a home because equity and value creates generational wealth, not a bank account.
No.
Not a bank account. So this is why we're doing this. No one's doing buyer seminars because there's first-time home buyers are sitting out, and we're like, guys, like this is the time. You're creating your own competition. You are your competition. And it's really like Nini was so smart to put this together because this is really the time that first-time home buyers should be
jumping on the grenade and just saying, no, I'm sacrificing.
Everybody's so scared
I'm
about the
going in.
interest rate. Like, guys,
Yeah.
forget about the interest rate. If the monthly payments make sense to you
Mm.
and you can buy what you want, who cares what the interest rates are? Then when they go down, you can get an even lower monthly payment. So like, think about
While
it
the
that
housing
way.
prices are still going up.
Exactly. So you're building equity. Then if the interest rates go down, you refinance and you lower the monthly payment. And then 3-4 years, you decide to sell. Now you're making money. You know what I mean? And by waiting and continue renting or whatever, you're just wasting money. Like that kind of like.
You'll be in multiple houses in the next 10 years.
Yeah.
You know, so to get in one just creates the opportunity to do those things.
Yeah. And this, remember, the mortgage insurance, that drops automatically at 78% loan to value ratio, right? But let's say your property goes up in value like it has been for the last few years, a little faster than you're paying it down to 78, you can actually get an appraisal and have that removed once you reach that 80% LTV, the loan to value. So this can come off too. So that can be even lower 5 years from now, or even less than 5 years. So, you know, as soon as that works, who cares the rest, right?
Mhm.
The monthly payments make sense and you're getting the house you want, that's really all that matters.
Absolutely.
Do you even want to do the other one? Because I think it's basically similar.
Yeah, so I just,
Yeah.
let me just show them, I just want to show you the difference between 300,000, because I feel like a lot of the buyers and a lot of the houses right now are like that 200 to 350, 2 to 300,
Yeah.
something like that.
Yeah.
I just want to show you another one. This house is coming,
Is it coming soon?
this is coming soon, 211 South 7th Street in Harrisburg. So I just grabbed one real quick, put it on there. If you want to go look at it, go with me. But this is, this is as of Friday, this is real numbers. So 7% interest rate yesterday, 96.5% LTV, monthly payment 1741.24. So on a house that's $200,000, we're looking at 1741.24. I pulled 9 rents from the same zip code in Harrisburg. The cheapest rent was 16.25 for the same thing. Like
You could be buying a
you're
house.
paying somebody else's mortgage now, right? All that value and generational wealth, they are thanking us, right? Our job, my goal was to help people that are renting or living with somebody to
Yeah,
pay themselves, right? So start doing that themselves. But the monthly payment, 1741.24. Now just look at the difference in taxes. So this house is smaller, but the taxes are $78 more. Okay, but look at the mortgage insurance, $140 difference to 87, because it's just based off of it's based off of your debt to income. Mortgage insurance, how much you pay is based off of debt to income, nothing else. They take your debt to income ratio and then they put you in a bucket, okay, based on credit score. So your mortgage insurance for this is $87.61. Hazard insurance, I use $75. Guys, what I do is $225,000 and lower. I use 75. Over that, I use 125, and it's somewhere kind of 60 to 125. But that's a low payment for some people that are renting, right? Again, the escrow setup's the same, right? Homeowners insurance and all those things. And then you look, I told you 1% for the state transfer tax, 1990, and then your title insurance, 1589.30. So that's some things. And then if you look at the cost to close, all right, now you're 5,000 less, 4,000 less. So now you're at 2185. All right. There's a special loan product from the state called PHFA. All right, that's the last thing I want to say. Don't get too excited about it because you have to be in a box, right?
Yeah, it's a very specific box.
Everyone's credit score has to be over 660. So both borrowers would have, if you were both on the application, you both have to be over 660, okay, for a credit score. You can't make over $160,000 or whatever the new threshold is. But if you fit in that little box, I get you 5% of that. So 5% of the purchase price. So this purchase price is $200,000. I'm giving you $10,000. You don't pay that back. There is no catches. There is no gimmicks. There is nothing. This is PHFA, is Pennsylvania Housing and Finance Agency. You guys always hear about the Federal Reserve and rate hikes, and PHFA sets their own interest rate.
They don't abide by those things.
There's nothing to do with it. So the federal shutdown that's going on, the PHFA loans aren't affected. PHFA is basically saying, we want you to buy a house in Pennsylvania. We want you to use us. So PHFA's rate right now is 6.875 today. We're a 7 for a regular rate. Only difference is you can't close before 45 days, but you get 5%. So now I'm asking you, hey guys, you have $10,185 to buy a home. Yeah, my grandmom's giving me $5,000 as a gift. You got to come up with $5,000 to buy a home and $1,741.24 a month. So home buying is not that great of a challenge if you have a credit score, you have employment, and then you're willing to have an honest conversation about how we come up with the closing costs. Some of you might say, Mark, I have no gift. I make too much money, and I just, we've paid off loans, we've paid off student debt. I don't have enough for that. Great. Well, now you know the exact number that you need to save up for. So doing the application, the pre-approval, it's never a waste of time for us when you do the pre-approval because we know you're serious. But now, like if you were driving in Nebraska, you would have just like, well, I'm going to head northwest. No, like you print out directions, you put it in your app, you know the ending point, like specifically. This is a specific number. Like this is not a made-up number. It might change a little bit based off the interest rate, right? Because that'll
fluctuate
your escrow account. But that's a real number. So yeah, and then the only thing with interest rates, they do fluctuate daily. They fluctuate hourly. So like gas prices, if you go to get gas in the morning and it's $3.75, you're like, oh, I'll get it tonight. And it's $4 when you go home. Interest rates are the same. So they change daily. They change throughout the week. But that's a cost sheet. That's as simple as it is. It's just, can you have the big number at the bottom? How do we come up with it? And then are you good with the monthly number? Other than that, that's what it is.
Yeah. You guys have any questions on that portion?
The one that you showed, the 199, is it a new built house? Oh.
It's a coming up property that's gonna be for sale.
Wow.
Yeah, it's a current home.
It's a current home,
Yeah,
yes, yeah, that's this address here in Harrisburg. That is an actual property that's coming up. I wanted to bring one that is real in the market now, so you guys have real.
So now you guys can go home, go on her MLS site and look at, but you can look up that property and then like you have the cost sheet to go with it. So what I would say is, if you've noticed, we're about 10% closing costs to purchase price. If you notice, so we're at 20,000 on the purchase price of that, and then you're at 24,000 on a purchase price at 300,000. So you're almost about 10%. I typically tell people 8 to 10% is where 7.5 to 10% is where I end up.
Yeah.
So if
And that
you look,
depends on the down payment.
yeah, of course, I always go based off minimum down payment. So just use 3.5%. But I always say 7.5% to 10% is, so if you're looking at a house online, you can give yourself that 7.5% number, give it the 10% number, and your closing cost, that total number is going to be somewhere about there. Use 7 as an interest rate right now is probably a fair starting point. If you're
Unless you have like a perfect profile and you meet all the little boxes that we talked about for grants and whatnot. I actually have an example which is amazing and I want to share. This is exciting. This couple in particular, they were using VA. So they had zero money down, right? They're a military couple, and they qualify for the VA loan. We found the property. We actually, they used PHFA, so they get into 5% to cover their closing costs. And then they don't have a down payment, so they're only using that towards their closing costs. And I think we managed to get some seller's credit in there too. Their total out of pocket for the entire deal, and they bought a $325,000 home, was 69 cents in the end of things.
Yeah, so that doesn't apply to you guys.
It doesn't apply to everybody.
But USDA does.
Yeah.
But the USDA loan does the same thing.
So it's don't get me wrong, not everybody's gonna fit in that box, is that they fit
But
in
everybody
every
can
box.
fit in, but everybody can fit in USDA because I can do PHFA USDA.
Correct.
So
It limits the
Tanita's
location, but
Tanita's
yes.
point, like you might be thinking, well, I'm not VA, right? But you're
But
USDA.
USDA,
Yeah, that's such a smart. I've had people get money back,
yeah.
$1,300 back on a USDA loan in Shippensburg. So if you want to own a home, you just
We
need
can
a,
make miracles happen.
you just
It's
need a
that
credit score
we
and
need
you
to
have
know you
closing
first.
costs. Yep, credit score and closing costs, and then once we have those two things, and you know a general idea where you're willing to live, then you can make it happen.
You just need to talk to us first. That's really what it comes down to. So closing day, we talk about it. That's the day you sign everything, you get your keys, everybody's happy, you get a gift, and that's really it. How do you pay your closing costs? Check, cashier's check, and or a wire. That's the only two ways. No cash on the table, nothing like that. A lot of people think, can I bring cash? I'm like, no, you can do that. But yeah, so that's really it. And that's all we have for today. Thank you so much for you guys coming, and thank everybody that watched online. We had
Any
one
questions?
person that survived
Any questions
the
in
whole
the chat?
time. Let's see. No, just
Cool.
they actually let us know there was no audio. So so now it's good. Yeah, so that's it.
Any
Thank you so
questions?
much.
Thank you. I think we're good.
Yeah.
Based on the numbers that you're showing us, especially
Yeah.
the 300 house, it sounds familiar to me because a friend of mine just bought a house in Texas, and then it's like a $300 home, $300,000 home, and I asked him about the mortgage. He's telling me about the 2,300.
It's about the same.
It's about the same.
Yeah, because numbers are numbers.
Yeah,
you know?
it's number, and then
Yeah.
and then he told me that the interest is kind of like 5%. I'm not sure about that, but based on the like purchase price and the monthly, especially that's the important thing. Especially like
The interest rate you said?
I'm not sure if he told me 5%.
Well, so, yeah,
The
so,
timing could be different,
But
Well-
I know if they have different taxes in there.
well, no, it wouldn't be that.
it could be an arm.
Well, it could be several things, right? Like
Yeah.
PHFA's rate 6.875, but not PHFA 7. PHFA rates are 6.375 if you don't use their down payment assistance versus 7, right? If you just if you don't use PHFA, you can buy points. Like for a $200,000 house, you can pay $4,000 and go from a 7% interest rate down to a 5.5. So you can pay points. You can get an adjustable rate mortgage. There's a lot of ways, but like when you give, I don't want to go into too much detail, but like when you give me, Mark, this is my month, I can't go above $2,000. I then got to go find a way to make your monthly payment go. So one of the things I might say to you is, hey guys, listen, you're gonna have to pay $3,000 in points to get your monthly payment to the number you like it, right? And that might give you a 5% interest rate. You're not gonna run around telling your friends, hey, I paid points to get a 5. You're gonna say, hey, I got 5% interest rate.
Yeah.
So there's a lot of, when I see cost sheets, I'm like, oh yeah, you do have a 5, but you're paying $7,000 for that 5, right? By the time you refinance, let's say you pay.
Sometimes it makes sense, sometimes it doesn't, so it's good to run the numbers.
Yeah, so yeah, when you buy points, right? What I do is I take the difference in the monthly payment, so a 7 rate versus a 5 rate. Let's say you're saving $200 a month. Okay, I'm gonna find out the total cost that it was. So that's what, $2,000, $4,000. I just divide those numbers by each other. I divide the cost by how long. It tells me how many months you have to be in that home to make it up. Right now, I would never have somebody pay points because by the time they refinance, they wouldn't have recouped the money it cost them. So I'd say, hey, just pay the higher rate for a couple months because when we refinance, you'll be in a better position. So yeah, rate is person by person. And honestly, if you guys have $20,000 extra in the bank, looking at the market, sometimes it does make sense to buy the rate down. So great question. Yeah, all the things you hear from people, bring them up because they help you create questions if you don't have your own questions.
Yeah.
So no, I totally appreciate that. Call, text, email, whatever you.
And the arms sometimes are on the adjustable rates. That's when your rate can fluctuate, but they are like, fixed for like so many years. They can be good, but they can also not
I
be
don't
good.
touch them. I don't touch them unless the borrower says,
I want it.
Because what if the market doesn't come back and I have a young family who I put in an adjustable rate mortgage when I know in my heart, like, this is dangerous. And now all of a sudden that 7.5 goes to a 10 and they're stuck. Like there's things that are so volatile right now, unless someone's like, Mark, I want that. Then I'm like, okay. But
they can still refinance later.
but then you can always refinance out of it. But I try to just let people know that there is some danger with that, but there's also some amazing ability that an adjustable rate mortgage can give you. So
Just understanding.
I try to show the good with the bad. Okay, here's all the bad, but here's the good.
Yeah.
Because they're big purchases. Cool.
I just want to ask about your financing. You said that in case in the future we will refinance, so the monthly payment will go down to like less than
Because you're refinancing
in
to a
case, okay? And then does it mean that in case that house is like a 30-year payment, will it be like a 40-year
No.
payment?
So what'll happen is I'll call you. I'll say, hey, I'm seeing, we went to settlement December of 2023, maybe it's next November, whatever, 24. I might call you guys and say, hey, I'm seeing rates 5.5. I know your mortgage payment.
Yeah.
I ran your numbers. You're at 23.81 now. I get you 18.50, and your rate's going to be 5.75. It's a whole new settlement. So now you're back into another 30 year. Yeah, you're just going to. It's called a rate reduction refinance.
Okay.
There's also cash out refinance where you just take cash out, keep your rate, cash out, and change your rate.
Yeah.
So I normally say don't refinance unless you're saving at least 0.75 to 1 point.
Yeah.
Doesn't make sense, because why refinance at 0.5?
Yeah.
And then rates go down even more and more. Now you're like refinancing every year.
It's not a substantial difference monthly that's gonna matter to you. 1% makes a difference. Nowadays, I would say 1% is almost like 100 and some bucks.
Mm-hmm.
So if you're getting a 2% reduction, oh yeah, that's a heck of a deal.
Yeah.
So definitely refinance.
Yeah.
But it does become another 30-year mortgage. Unless you decide to say, can I refinance
Into a
into
15-year
a 15-year or 20-year?
The other thing you can do is, if you put an extra $200 a month on your mortgage payment on average, that'll cut it down by like 13 years.
Yeah, that's a huge thing.
So I typically I like to spread this, I'm terrible at Excel, my wife's amazing at it. So she put this Excel spreadsheet to get an amortization schedule.
Oh,
So
wow.
basically, I have a spreadsheet that I send all of our buyers after they settle. I say, hey, here's your interest rate, here's your monthly payment, here's your loan amount. In this little box over here, just put any dollar amount you want to pay over, and at the bottom, it'll tell you how many years and months it'll cut off of your mortgage payment. Yeah.
Yeah.
So sometimes it doesn't make sense to refinance to a lower rate.
Yeah.
That's business out of my pocket, but it's not a good business decision for the borrower, so I would never do it. Just put more money down, or just put more money to your monthly payment.
On
So
average, one full additional payment per year reduces your loan by 7 years, like somewhat. But like I said, let's say you're comfortable with this, and let's say you can use $2,500 monthly and you put the additional towards it. That could save you 9-10 years already right there.
Mm-hmm.
And then when you are actually going to refinance, you're going to have a bigger equity span that you could potentially cash out and pay some debt or buy a new hot tub or whatever, you know what I mean, for the house.
I got people putting pools in right now, and like, not now, but they're doing the COVID times in the last couple of years, and some people that just aren't willing to sell right now, they're just say, hey, we'll just make our current home better, right? And
That's
do
what I
something
did.
better.
My home grew up in value so much. I bought it for $280, and we got an appraisal at $400. So what I did, I got a home equity loan, which is something you can do. You don't have to refinance. It's just a separate secondary loan, and you can use that to do improvements in your house or really anything you want. So what I did, I finished my basement.
are you guys looking on the West Shore? Is that like the idea?
Yeah, it's near to work, and I don't want to drive far.
Where do you work at?
Holy Spirit.
Penn State.
Penn State.
Both of us.
Both of us.
At Holy Spirit?
Okay.
That's awesome.
I'm just a nurse, then I am in registration.
Yeah, they actually know the clients that I worked with before.
My wife's in physical therapy.
Oh, okay.
Okay,
You guys are all amazing. Healthcare professionals.
thank you.
I was just at a gala in New York. So I was in a gala in New York City on Thursday night for a thing called Moment of Magic. I don't know if you ever heard of it. It's called Moment of Magic. A girl from Allentown, PA started it out of her dorm room. My wife's company, my wife was the honoree. She got honored. Their company raised money, and Moments of Magic are nursing units across the country that are willing to do this. And Moments of Magic send volunteer college students into pediatric units for children with cancer. So they dress up as like all of the Disney princesses. So there's sorority girls from Shippensburg that do it in this area, but it's the same sorority nationally. It's for children with cancer. So we're just there, but they had honored a group of female nurses that were the first triage unit for COVID in New York City.
Oh, wow.
That's who the gala had nominated Thursday night. So there was these 25 nurses that were there. They were the first nurses, and now those nurses all do pediatric childhood cancer together.
Wow, that's amazing.
So it was kind of cool. So I was being around so many amazing healthcare professionals recently. That's awesome. Thank you for your service.
Yeah, thank you.
That's awesome.
Do you guys know Sindel too?
Who?
Sindel? Cindy?
Uh,
She's a nurse too, but she's
in
in the
Hershey?
Hershey.
Yeah, I know her.
You
I
know
met
her?
Yeah.
Yeah, we're closing on her soon too.
Sydney.
Do you know Sean Davies,
Uh,
Hershey nurse?
I'm not familiar with.
Oh, the Hershey ones, okay.
We're just new here, like,
Yeah.
actually speaking of, you said that
2 years.
we would be qualified for a loan, like, if we're working here for like 2
2
years,
years.
and then we're just here for like 10 months.
No, you can work anywhere.
I mean,
I mean,
you
Even
said
if
you
that.
come from- No,
like,
if you live in Cumberland County, if you want to use the Cumberland County grant, then
okay,
you had to have lived there. You guys probably make too much. You make more than $40,000 a year together. Yeah, so you wouldn't even qualify
Okay.
for the grant. Yeah, $43,000 is the max now.
we don't mind.
Very low.
We understand,
Yeah, so,
You know.
but, yeah, as far as working and stuff, that is just, that's.
So it doesn't matter if we just stayed here for like a year, or we didn't like
oh,
finish
but
the
yeah.
2 years.
Because I thought like we need to
Salaries?
Like more than 100.
No, I'm saying, are you salaried?
Yeah.
Hourly, yeah, so, yep,
Yes, it'd be fine.
Yeah. yeah, where did you guys come from?
Because they can also justify whatever absent to.
What do you mean?
You said you just moved this area?
From the Philippines.
Philippines, awesome.
We came from the Middle East, so it's been like
All over the place.
And you guys said you know Mars, right?
Yeah.
And then do you know Francis too?
I know.
Are they friends with
Like-
Mars?
Francis' wife just came from the Philippines too.
Okay.
I sold his house, and he had a roommate for a while, but then his wife, I think she's here now with his girl. His kid.
Okay.
Yeah, so it's such a growing community. So I'm actually working with a
Especially
few.
now in Holy Spirit, like.
Yeah,
there's
Like a
lot
bunch
of
of like
nurse.
new.
Yeah, Hershey, yeah, for sure.
Hershey, so you might be getting like
Uh,
newer clients.
Yeah.
Have you guys found any, I'm like a big food person, have you found any cultural food that fits kind of your desires locally? Yes, no?
Sometimes we're traveling
We're
to
going to
tourists
Maryland,
here,
New
Maryland.
Jersey.
To go to good food? Nothing here, right?
Not much.
Maryland's the nearest one.
He cooks. It's
Yeah.
fine.
Okay,
But sometimes
okay.
we're just craving, so there's a lot of.
There's some Asian store like you can
there
buy
is. There's
stuff.
one right here on Paxton Street.
Yeah, in 13th Street also there's a
So,
Asian mall.
yeah, the one over 13th and Sycamore.
It's near in DMV.
Yep, right up the street from the
Yeah.
DMV. There's an amazing, not a faux place in there, is it?
Some
Thai.
Vietnamese
Which
Viet
one?
or
Thai
Thai
or
food.
The Thai food, yeah, I love that
The
place.
one in Campville that was really good, he burned down just recently, earlier this year. He was really good, and the owner is my client too, and he's like, yeah, we're gonna have to redo and reopen, but yeah,
Wow.
he was a really good one too.
So Asian food is like my wife and I.
Oh my
When
gosh.
she had pho last night, and I ordered sushi, 2 different places. She went for free, and I went to Takashi.
Oh
And
yeah.
other places. So
That's actually where, the one in Capitol.
yes, I went there by myself,
Oh yeah.
and she went and got pho.
The folk, yeah, what's that Carolina Park? That area? Going to our gym, going to, what's that, Planet
Which
Fitness?
Sushi.
No, the folk thing last night.
Oh,
The folk
yeah,
thing.
yeah.
How was it good?
We never tried yet.
There's a place in Harrisburg I really like. Himalayan
The Himalayan, yeah.
Himalayan fusion.
Yeah,
Uh-huh.
that's a really good one. I
It
think, too.
is, yeah, it's really, I think. But is it Vietnamese and something else?
Diamond,
Thai food.
it's Thai,
It's 2 or 3 fused now.
it's Thai, Vietnamese.
And there's one other, I can't think of the name. It's
Right.
so good. And then
Yeah,
Bon
I
Bon
remember.
Cafe
Uh-huh.
down at, have you been there?
Not yet.
Bon Bon Cafe, it's
No,
a,
but I saw that.
yeah, that's,
saw that.
it just seems fresh. Like those 2 places seem very fresh. I like vegetables. Cool.
Awesome.
It was really nice to meet you guys.
And for
It's very-
everybody still
very
watching,
informative.
ooh, that's an echo.